Hi guys, what is going on? Piotr here, this is LiteFinance Global YouTube channel, and again, it's my pleasure to be with you here. What we are going to discuss today is a little bit different story, a little bit different approach than what we do usually. Because of the latest Fed developments, because of the inflation rising through the roof, right? We are going to try to have a look on the indices from the higher time frame perspective. What I mean by that, we are going to check few indices based on the monthly, weekly, maybe daily chart, especially that we are approaching end of the month, and the things well, not going in a positive way when it comes to the bullish scenario. All right, so indices, there you go. Let's start from that particular one, which is very, very sensitive when it comes to the possible rate hike. I'm talking about the Nasdaq, right? The technology sector, because usually we are working with the debt. During the very, very low interest rate environment, everything was fine. As you can see, we were moving higher, and higher again, right? Reaching from the very low post-pandemic first wave of the COVID pandemic wave low to the high over here from 6,600 almost to 16,600. So well over 100%. Now, as you can see, the things are not going well. So what we are going to do, we are going to place the red dotted line. Red is a monthly chart, dotted is a yearly open. So as you can see, it was just attempt to go higher with huge or even monster fade when it comes to the Nasdaq. Based on the monthly chart, the next visible demand zone is somewhere in between the latest swing low, right? That's what we have here, latest swing low, right? So still a little bit to the downside is possible. We are talking about the 14,700 and 14,400, 350, right? So that's the first possible low when it comes to the Nasdaq. What else? There is another possible demand just shy below 14,000, right, with this possible swing low over here, and in that case we are talking about the 13,000. So that's the first possible demand over here based on the monthly chart. That's the huge monster demand zone, untested. That's very crucial, untested. So we might see, in case of the breakdown, we might see attempt to go higher and trying to stabilize this market, right? That's what we have when it comes to the demand on the monthly. What about the supply? Supply, well, depends where we are going to get the monthly close. If we are going to get the close below December low, 15,500, right, then you have to closely look at attempt to rebound towards that particular low, from here we might go lower here and attempt to go lower. All right, so that's the significant zone when it comes to the possible supply. In case we are going to get the close above this level, we might retest yearly open. Only monthly close above the yearly open could produce further rally when it comes to the Nasdaq. Let's have a look what we have on a weekly chart. We have our levels. As you can see, boom, the zone from the monthly chart also clearly visible on the weekly. That's the swing low from where we went higher and we produce new high. We went higher through this high and we produce new high. Now, the very bad thing is that we broke through this significant level over here, right? So that's the first level of supply, again related to the monthly chart. If you are not very long term but medium term, then you can take into the consideration this zone. You can take into the consideration this particular zone. We had a failure over here, right? And not only 15,500, but mid of that range, somewhere close to 15,900, 16,000 could work well as some supply zone. When it comes to the demand, no change to what we discussed based on the monthly, and no change to what we discussed based on the monthly. So both monthly and weekly, we are approaching possible significant demand zone, but looks like market is trying to go ahead of the what we get from the Fed, and looks like 0.25 might no longer be the case. Looks like market is looking for some bigger move from the Fed side. Finally, the daily chart when it comes to the Nasdaq, okay, and it looks like from the daily chart this particular zone might be critical, again related to the monthly lines, the levels close to 14,500, 14,400. That's very, very significant level, especially that it's very well visible that we are going to double that range which been broken to the downside. There was a failure to the upside. If we are going to double that, if you are a medium term bull, you are waiting for the retest of that level. So that's the Nasdaq. Let's have a look what else we have. In that case, we are going to switch to S&P 500. All right, so let's switch to S&P 500. Let's clear some lines. Let's get back to monthly chart. Monster outside month. Well, I'm quite surprised. Higher interest rates should produce at least the banking sector rally, but looks like lately we've seen the fading when it comes to the Goldman Sachs and JP Morgan, and we are producing outside month. If we are going to get the close below the December low, all right, that's gonna be very, very negative. We are well below yearly open, and looks like this low, the December low, it was the low base on this big rally, consolidation, continuation. Mid of that range, 4,400 is the next level of the support in case of the break below December low, and then of course the swing low on the monthly chart here is the next level of the support. So let's place a few more lines here. this swing low here, it might be crucial. It might be crucial. So we are talking December low around 4,490 and the swing low around 4,300. Crucial to the upside is supply around 4,780.90. Let's switch lower. Let's have a look what we have. Still, compared to the Nasdaq, still there is a chance we are going to try to hold the range, right? So what we might see on the weekly chart, we might see attempt to break lower, but we might build lower shadow, right? We might have a close like this, and we might see the rally. We might see the rally. The first is 50% of that range. We are talking about the levels close to 4,650, 4,700 when it comes to S&P. In case of the break to the downside, we are going to double that range and we are going to test this swing low close to 4,300, 4,250. Well, that's how the things looks like for now. Looks like the bears are trying to take over also here. Finally, the daily chart here. All right, there is a possibility of some kind of the big head and shoulders, a little bit of the rally could be in place, and the line from the monthly chart could be the neckline. So 4,500 as a key psychological level. Let's switch to the Europe. Let's have a look what we have when it comes to the DAX index. All right, so what we have the yearly open, right? We have the December low, and that's quite significant because we are far away. Why? Because market did realize that ECB may not be in rush to hike the rates. So it looks a little bit different than what we've seen on the US indices. The crucial level here is this particular zone around 14,850, and let's check what we have here, 15,000, right? So that's the first significant level. The next one is this breakout candle low over here. We are talking about the levels close to 13,900, 13,800, and finally we are talking about the levels close to 13,200. All right, from that perspective, move back above the yearly open over here, well, could be very well in place. But if you are going to see towards the end of the January, the close below the mid-range of the December, then the supply, strong supply, is going to be around the yearly open to create the swing high. Let's have a look what we have lower on the weekly chart. As you can see, this big range from that particular week is holding the ground, fading on the move, attempt to go higher. So for now, we want to see some stop count below 14,900 with the lower shadow to try to confirm the range in place. Otherwise, we are going to double this one and we are going to retest this particular zone we discussed a second ago based on the monthly chart. So as you can see, both in US and in Europe, where the DAX is the most important, we see some bearish developments where the US indices are showing the bigger signs of the bearish market in comparison to the DAX. Why? Because of the difference between the Fed and ECB. Do your own research, do your own homework, don't be trapped. Wish you great next trading day. Stay focused, stay safe, see you around, take care and goodbye.